Hello, good morning and welcome to ET Now. You're watching Buy Now, Sell Now with me, Varun Hiremat, and Mubina should be with us in just a minute. Let's take a look at the markets this morning. Definitely under some pressure compared to what we've seen. We opened weak to start out with. We then climbed a wall of worry and then we've ebbed off again, and we're pretty much at the middle point of the day. In terms of what's standing out, the midcap index is the only thing I can see on my screen right now that's slightly green. It's up over 1%, but whether you look at the banking index today, the financial services index, which has just been included in FNO, we're definitely seeing some pressure. Of course, there are pockets of value today. We do know that auto is doing fairly well, given that Tata Motors is currently up around 12%, post some strong updates coming in over there. And clearly the auto index today is the leading benchmark, up 2.30%. There's very little else that's trending positively. Of course, commodity stocks like metals are also doing well. So the metal index is still up over 1% today. Stocks like SAIL are doing fairly well. Nifty Media, that's continuing to do well, up 0.94%. And the PSU banking index today bucking the trend, up around 0.66%. We also have a glimmer of hope from Realty, continuing the momentum. It's up nearly 1% today. So that kind of gives you a flavor of what the index action is like. But in terms of select stocks from within the Nifty, we have top gainers of Tata Motor, Eicher Motor, GAIL, IOC, sort of clear trend there. Crude link stocks, auto stocks, then Bharti Airtel, which has just been upgraded. On the losing side, taking a bit of a break, we have Techem, Divis, Kotak, Titan and Asian Paints. So mixed bag of stocks from different sectors. So no sectoral losses really. There's no clear sectoral trending downwards. But clearly on an upswing today, we have auto and some crude link stocks. So that's the current market breadth, 27 to 23, advancing to decline. So we're okay. I wouldn't call this a sell-off per se. I'd say it's some mild profit booking. But let's get in the expert take from our experts who are with us. Gaurang Shah and Kunal Bothra are both there. Good morning, gentlemen. Thanks for taking up the time as always. Kunal, coming to you first. What's on your radar today? Auto's looking quite good. Media index is continuing to look good. Where would you place your bets?
Well, good morning, Varun. And I think one of the other sectors, which we can say which is buzzing very well, is the Tata group of stocks. It's doing exceedingly well. Many of these stocks have run up quite strongly, whether it's Tata Motors now. The other Tata group of stocks are also making a comeback. So I'm picking up two names from this set of category because the stocks are in strong momentum. The first one which I'm suggesting is a buy in Tata Power. Now the stock heading towards a breakout. There's been a huge build-up. So this is interesting because Tata Power and the next stocks, they are not just purely on the price pattern, data point, but it's more towards the options, built up which has been seen into these names. So Tata Power has seen a huge build up at the 85, strike call option. There's been also a strong build up at the 90 strike call option as well. The stock is trading at 85.5 or 86 levels. So I believe that on the back of this, strong build up on the call options, on both these strikes in the money as well as deep out of the money, I would expect Tata Power to do pretty well for itself over the next 1 or 2 days. So it's a short-term oriented buy call on Tata Power, targets of 92. Stop loss could be kept at 84. And the second would be a buy on Tata Chemicals. I think after almost a month of sideways price action, the stock is making a very strong comeback. In fact, the stock at 520 when it had hit earlier, almost a month back, the RSI had jumped up to almost a level of 90. Then after cooling off, the stock is making a strong comeback. So, after the initial, strong uptrend, it's now showing signs of maturity and, more stable upside over the near term. So I would expect Tata Chemical also to do pretty well for itself. It's slightly higher risk trade because of the, high beta nature of the stock. Would suggest a buy with a target of 550 and stop loss now could be taken to 510.
Okay, so Kunal, very upbeat on two stocks from the Tata stable. Keep your eyes out on those, technically looking very good. Gaurang, coming to you for a more fundamental take on things. Since we last spoke, what's changed? Now people are suddenly starting to flag off inflation. Treasury yields are shooting up because stimulus is around the corner. Sectorally or from an ideology standpoint, has anything changed for you in your investment thesis? And in light of that, what are your calls for today?
Well, thanks, Varun, and morning to all of you also. There is always a sour taste for those people who have missed out on this rally. And then you need to find reasons to either convince yourself or others who are not getting convinced because of certain excuses. Now, we all knew the backdrop against which we have come out. Inflation could stay a little bit elevated because of the backdrop environment that we're in. It will take time to ease off. In terms of run up into the market, yes, I mean, it has been a phenomenal run for the last at least about 3 months, correct me if I'm wrong, with some minor running corrections intraday, which again the market, completely covers by the time we end the trade. And on fallback of positivity, well, I think Q3 numbers have started off on a sober note. We saw TCS and Avenue Supermarts. Very soon we'll see either, tomorrow, day after, we'll see Infosys, Wipro, HCL Tech, Tata Elxsi comes out with the numbers today. Saturday we'll see HDFC Bank. So the hope is that the color and the shade is going to be a little bit brighter and better for the Q3 compared to Q1 and Q2 for this financial year. And the fourth financial year is going to be even better. So it's going to be and of course you have the big event, Varun, on 1st of Feb budget, union budget, a great expectation from there as well. So I think we'll see choppiness, volatility, but all dips should be used as buying opportunity. Locally, I don't foresee any kind of huge negative news flow. It's only the global phenomena that plays out and we react to it in terms of news flow. So I think if you are in for the long term, don't get bought into by these kind of stories. Stay focused, look at strong fundamental stocks with earning visibility and great corporate management, and commit your capital to those stocks from a long-term point of view. And with that perspective, we have two investment ideas. Basically, with the near-term event, that is the budget that I just spoke about, Varun, and that the sector is healthcare, hospitals and diagnosis sector. Now, what we at Geojit believe that there's going to be a major announcement in the budget which will have a positive impact on hospitals as well as stocks related to hospitals as well as diagnosis. So first one is Dr. Lal Pathlab from the diagnosis pack. 2650 is the target from a medium to long term point of view. And the second one is a stellar performer in the healthcare hospital sector, that is Apollo Hospitals. I think right from 1100, 1200, the stock has seen a phenomenal rally, trading somewhere close to about 2500 or thereabouts. Medium to long term targets of 2950 on Apollo Hospital. Now these are fundamental, medium to long term investment ideas, purely keeping the budget in mind. And even post, if there is no huge announcement in the budget, these two companies are very strong in terms of earning visibility.
Okay, great. So good to see that both our experts still maintain a positive view on the markets, and we know what we're betting against, so you just have to find prudent calls. So Gaurang from the healthcare space and then Kunal from the Tata stable. Let's talk more technicals and fundamentals, and we have viewer queries in just a bit, but my colleague Jayesh is actually standing by, and he's done some very interesting numbers on what this market rally is really telling us, and has there ever been a rally like this before, and are there any chances or slim chances that we might be in for a correction? Let's go across to him.
There seems to be no stopping this market because the Nifty has scaled past 14,500. That is a whopping 90% recovery that we have seen from its 52-week low. But there are some early signs of froth in the market, or some bit of overbought or overheating in the market as well. One of the parameters to track the same is look at the percentage of Nifty stocks that are currently above their 52-week high, and that is almost 40%. Now remember that this is the highest number that we have seen since 2014, and the chart will actually show you that there are not many instances when there are more than 30% Nifty stocks that are above their 52-week high as well. And whenever such instances happen, there is some bit of cooling off in the market that takes place. And the second table will actually show you that the last 5 instances where there were more than 30% Nifty stocks above their 52-week highs, we had minor corrections in 2016. Over the next 3 months, the Nifty corrected about 9%. While it remained flat over the next 6 months. In 2015, the correction was as high as 5%, and in the next 6 months also it remained negative as well. 2014 was an exception where you had double-digit return over the next 3 and the 6 months. 2010 flat return for next 3 months, while you had a 10% correction in the next 6 months, and 2007 also you had 17% up move in the next 3 months. However, it did manage to finally decline about 7 to 8% over the next 6 months.
Okay, thanks for that, Jayesh. So again, Jayesh is just flagging off the choppiness that we might be in for. And historical data definitely suggests that when these valuations get as lofty as they are now, you do tend to see increased volatility in markets. I think it's time for a quick break here on Buy Now, Sell Now. We'll be back in just a minute. Stay tuned. Hi, welcome back to Buy Now, Sell Now here on ET Now. Let's bring you the BNSN stock cloud for today. As you know, we flag off different stocks every day for various reasons. Today we have a lot of stocks that are from the auto sector and they're very active. So Tata Motors, of course, leading the cloud this morning. JLR reporting some good numbers and definitely looks like the turnaround is ramping up over there. Q3 is looking very good for them. We then have Airtel, which HSBC is upping its target to 650 rupees per share, one of the highest targets we've seen for Airtel lately. We then have Suntec Realty, which has posted a very strong Q3 update, like a lot of realtors have been. Clearly, property sales are still trending upwards. We then have GAIL, which is to consider a buyback on the 15th of January, so in 3 days. Dishman Carbogen, the OFS is still at hand and it seems that it's still underway and they're working out exactly how to proceed with that one, and of course the demand levels also have to be gauged for that particular OFS. We then have some more auto stocks today: Ashok Leyland, Hero Motors, Bharat Forge. That's because UBS has come in with a note and they really like the auto prospects here in India, and these three are their preferred picks within the auto pack. So that's the BNSN stock cloud for this morning. And while that's on your screens, I think we're now ready to go over to our experts and once again address the viewer queries that we've been getting. So let's begin that. I believe the first query is from the line of Himanshu Kumar, and he's looking at Indigo Airlines and at the current market price. And of course, airlines today are in focus because they're helping with the vaccine delivery, and not just Indigo, various commercial carriers will be assisting with the vaccine rollout, but definitely Indigo will also be one of them. So Kunal, coming to you first, looking at Indigo technically, you know, travel's about to pick up full swing once we're all vaccinated. We're just days away from a vaccination now. Is that a big enough trigger to buy Indigo right now?
Well, purely on the charts, I think the markets, have always favored, stocks like Indigo. I think except for that 3 months or 4 months of, a strong correction for Indigo, I think it was one of the few stocks which managed to also recover quite strongly. And, now when, the markets are into such a strong, and a fine mode, Indigo is also nearing its a bigger breakout on the longer term charts as well. So I think it's a stock which has done exceptionally well. It's a stock which has managed to weather a lot of volatility and still managed to make a strong comeback and show signs of resilience. So I think that's the quality and hallmark of a strong stock. So I would suggest that if you're looking to buy Indigo, then at current levels you could look to start buying at at 1750 odd. But I believe a better support level for Indigo would be around 1600, 1650 zone. That's where the 50-day moving average is placed for Indigo. So I think that's the next level of strong support. So if the stock manages to come back into that territory, I think it could be a very good risk to enter to that level as well.
Okay, great. So fairly upbeat, but just waiting for a better price, which might be possible. Gaurang, what about you? Is this vaccine rollout and travel resumption a big enough trigger to buy Interglobe aggressively at current levels? Or, like Kunal, would you advise waiting for a slight dip?
So, Varun, on fallback of this COVID-19 and the mutation and the new avatar, aviation, hotels, that is hospitality, multiplexes, are the first ones who would be falling in terms of any kind of adversity and change of rules and regulation and new restrictions or standard operating procedures coming into effect. And these news flows are nowhere close to dying down. In fact, we have heard escalated lockdowns in UK and Germany. Canada is the other one, is the other country that has come into effect. So if I don't know whether this gentleman has bought this share or not, because he said he wants to add to it. So I'm assuming that he's got some Indigo at a higher level and is looking to buy into it. So this advice comes with the caveat that news flows will have its impact, either positive or negative, on the sectors that I've just mentioned, including aviation and Indigo. Uh, you can definitely go and buy it if you have a high risk appetite and if you already bought it. Lower levels would be preferred because of the choppiness and volatility of the sector aviation on fallback of news flow. But let me say this, that in the entire aviation pack, this is the only stock, Interglobe Aviation stroke Indigo, that we are positive on. But like I said, with the caveat that there could be choppiness and volatility.
No, of course, Gaurang, one can see your point of view. Not to mention, crude prices are back at an annual high. So that's also going to hurt the airlines. And then, of course, like you mentioned, the news strain might deter some people from traveling. So verdict on Indigo is positive, but at current levels, you can wait for a slight correction. Let's move forward. Keval Desai of Mumbai has written to us. He's already bought Ujjivan and he's bought it at 30 rupees a share. Now he'd like to know if he should hold or exit. So, Kunal, coming to you first, Ujjivan on the charts, what insights can you offer, Keval?
30 rupees a share? Because the stock, I think, is a multi-year low of 150 odd. But nevertheless, I think Ujjivan has been one of the stocks which has just about found its mojo back. I think out of the last 9 months of the price recovery for Ujjivan, the last 3 months has been more fruitful because that's where you've seen some incremental gain into the stock price. So for the first 6 months of the price recovery, the stock moved from 150 to 200 in a very staggered kind of a manner. It's just that in the last 3 months, the pace of rally has increased. And from those 200 levels, the stock had touched that 300 plus mark as well. So I would sense that this is a newfound momentum coming back for the stock. I would suggest that if you bought at much lower levels, as you've quoted earlier, then I believe you should definitely look to hold. The next level of targets for Ujjivan with a time frame of at least 6 months to 1 year could be around this 350 to 370 mark.
Okay. All right, that's Kunal's view then coming in on Ujjivan. Let's take on board a fundamental view as well. Hi, Gaurang. What would be your take?
Hi, morning to you, Mubina. So I think the stock is Ujjivan Small Finance Bank. Correct me if I'm wrong, not Ujjivan Finance. And Ujjivan Small Finance, as we all know, because of the corporate development, we had the business being separated and listed as a separate entity. We maintain to have a positive view on Ujjivan as well as Ujjivan Small Finance Bank. Now, this advice comes with a caveat that I am assuming that the investor is talking about Ujjivan Small Finance, not Ujjivan Finance. And that is the microfinance part, and this is the banking part that got separated. So we remain positive on Ujjivan Small Finance with a long-term investment idea. And if you do get bad days and dips, which is below your earlier acquisition price, then you can definitely add to Ujjivan Small Finance from a long-term point of view.
All right. Well, yes, Gaurang, you're absolutely right. It's Ujjivan Small Finance Bank. That's what the question is on. Let's take on board our next query. It's coming in from Mayank Agarwal. He asks, should I enter Bhansali Engineering Polymers post the third quarter numbers? That definitely was ET Now's Dhamaka numbers of the day. The stock as well rallied very, very significantly yesterday, reacting to the third quarter numbers. So let me, Kunal, go across to you first. Is this a stock that you track? Because, it's something that has comparatively fewer volumes in the small cap space, but, we did see this massive surge in pricing and volume yesterday in trade. So anything that jumps out at you, anything that signals that, yes, this is a good price to enter?
It's a stock which I definitely track from the mid-cap space, and it's done exceptionally well. In fact, the stock had gone, all guns blazing in 2017 and 2018 when it had rallied from 20 rupees to almost, a level of 200 to 220. From there on as well, the correction had also been very sharp. So from 200, the stock had come back to almost 30-35 levels as well. Now again the stock has made such a strong comeback, so which means that the stock is now getting accustomed to these very sharp periods of rallies and equally sharp periods of correction. But then when you're looking at buying these stocks at a at a trajectory when it's almost run up into an exponential kind of a territory, it may not turn out to be a good entry point. And just looking at the plain parameters, the 200-day moving average, for example, which is a long-term average and a mean reversion point for stocks, is now placed at 68 or 70 rupees for Bansali polymers. So the stock is at 170 and the 200-day moving average is at substantially lower levels. So if there is a minor mean reversion process as well, the correction could be at least a 30 to 40 rupee correction into the stock price, which is a natural which happens in a natural course of time as well. So I would suggest that it's a good stock to look at from a longer term basis, especially given the history over the last 4 to 5 years. But then the price will not be attractive. I would suggest that if the stock corrects and comes back to at least a 120, 130 zone, I think that could be a better entry level for Bansali Insurance.
Okay, thanks for that, Kunal. Gaurang, coming to you, freakishly good numbers from Bansali Engineering in Q3. 180 crore EBITDA. In the last 10 quarters, they've never done higher than 45%. The margins also have never been higher than 15%. Suddenly, he's doing 45% EBITDA. So what's going on in this company? Do you have an idea? And if you normalize this, then the PE ratio becomes very cheap. So, fundamentally, what's the reading to take over here?
So, Varun, I always advise a cautious approach towards stocks which suddenly report a stellar set of numbers compared to the sector or the peers within the sector. Now, I hope that this is the number that sustains over a period of time. Having said that, we do not track this particular company. And Varun, there is also another, another thing that I would like to advise cautious is that these kind of stocks, they catch you by surprise on the upside and the surprise is even higher on the downside. So you need to be extremely, extremely cautious, reading into the financials, long-term investment point of view, etc. And if there are better options available, then why risk your capital into something like this, which has suddenly come out with a stellar set of numbers? Of course, big question is the sustainability. Having said that, no view on Bansali Engineering since we don't track the stock. But I think if you're looking for investment or if you bought the stock and if you're wanting to switch out, then in the cap goods engineering space, one mid-cap name that I'm extremely positive about is KC International. I think you can invest in this company or make a switch from Bansali Engineering to this.
Okay, great. So Gaurang providing a good alternative. And Kunal saying wait for a little correction and then it's not too bad to enter there. Nonetheless, Bansali's posted some very good numbers right now, but we'll wait and watch what happens in the quarters to come, if they can maintain or not. Next queries from the housing space, which is still very active. Mortgage lenders are very active. Mortgage rates are still low. Building materials are still on fire. LIC Housing Finance. Vijay Mehra of Delhi has written to us and he wants to get in right now at current levels. Kunal, on the charts, do you think it's wise for him to look at LIC Housing right now?
Well, I'm not sure what time frame is he looking at, whether it's a short-term oriented trade or whether it's something which he's looking to buy and hold for a longer duration of time. But then I think on of course on both of the time frames it looks attractive. Especially on the shorter-term time frame, I think it looks very attractive because the stock in the previous week I think had run up from 350 to 450. In a matter of just 4 or 5 trading sessions, 2 days of consolidation, and it has retraced back almost 6-7% of those gains. So the trimming off of the gains, the mean reversion on the short-term charts seems to have happened, and now I believe that the stock should be on course to breaking yet another swing high. So even from a shorter-term angle, I believe that the stock looks attractive. 435, 438 would be a good zone where you can look to enter. I would suggest a shorter-term target of at least a 465 to 475. On LIC Housing, and stop loss could be kept at 420 levels.
Okay, great. Gaurang, how about you? What's your verdict on LIC Housing?
So we remain extremely positive on HFC segment, that is housing finance companies, and with the improvement in the real estate sector. And I hope that in the budget also the Honorable Finance Minister has something to deliver for the real estate sector because it is the second largest employment generator. And a positive rub-off on the real estate sector does get passed on to housing finance companies and other related sectors and companies. So if you ask me in terms of ranking in the HFC segment, HDFC Limited comes first, followed by LIC Housing Finance, and on the third stage is Canfin Homes. If you're looking to buy LIC Housing Finance from a long-term point of view, I would recommend to go ahead and take that plunge, but don't deploy 100% capital at current levels. Use 25-30% at current levels and the balance on dips.
Okay, so clear verdict from both our experts. It's a go for LIC Housing. Perhaps you can average in to be a little more cautious. Final query for today, we have Sun TV. And Kunal, I know you've spoken about this one a fair bit already, but Meghna Singhal from Indore has written, and she's looking to get in now at current levels. And she's seen the long-term targets of 800 rupees. Does this target still hold, is what she's asking. Technically, what can you offer?
Well, absolutely, Varun. I've been bullish on the stock and I maintain that stance on Sun TV. I think it's an excellent chart. It's been one of the few stocks which has been a significant underperformer. But off late in the last 8-9 months, and specifically I think the last 2 months, we've seen a completely renewed momentum and vigor for stock like Sun TV. The only catch over here is that stocks like Sun TV, Z Entertainment, which are from the media sector, they're typically very high beta stocks. So they may look very attractive when these stocks go into a stable kind of a trend. So for example, I remember from 400 to 520, the stock had seen a very sharp uptrend, and in just a matter of I think few trading sessions from 520, the stock had seen a very sharp correction to 440 levels as well. So for someone who can digest this kind of a volatility and still stay on course, then I believe Sun TV could be a good stock in the offing. I for one believe that the stock should be poised for at least a 750 to 800 levels over the next 1 to 1.5 odd year.
Okay, and Gaurang, what about you? Sun TV's prospects looking good going into the rest of this year?
Well, I have a big question mark about the pedigree of the company, to be very honest. And entertainment stroke direct to home segment always has its ups and downs. So if you're not bought into Sun TV, then my sense is that FMCG sector looks very, very attractive. Given the last 2 quarters of earning, and now with the unlocking and the growth coming back, the numbers for the third and the fourth quarter and the next financial year look even stronger. So if I have to suggest 2 names in the FMCG pack, first one would be Tata Consumer and second one would be Marico. Of course, we've got plenty more names, but if I have to pick 1 or 2 names, then these 2 would be the names that I can suggest. So I would suggest an alternative FMCG sector, Tata Consumer or a Marico.
Okay, very interesting. Technically, the stock clearly looks good, but then there are corporate governance concerns and fundamentally a switch has been recommended. So you will leave the viewer with both angles and they can take their own choice. But thank you to both our experts for sharing your perspective with us. Great always to get perspective from you. I think it's time for a quick break on Buy Now, Sell Now. We'll be back with more market insights shortly. Stay tuned. Hi, welcome back to Buy Now, Sell Now here on ET Now. Tata Motors hogging the limelight today post that Q3 JLR update. Very strong performance. CLSA is coming in with an upgrade. My colleague Vinny is standing by to walk us through that note. Over to you, Vinny.
CLSA has maintained a buy stance on Tata Motors with a target price of around 270 rupees per share. So what are the interesting facts that they are finding interesting in Tata Motors? One, they see that the JLR sales are, JLR is improving the retail and EV share in both. And yesterday we did come out with the Q3 sales also. The JLR retail sales were up by around 13% on a quarter-on-quarter basis. Year-on-year basis, it was still down by 9%, but quarter-on-quarter basis, we are surely seeing an improvement. Also, CLSA believes that China, it is continuing to outperform. We saw the China sales were up by 20.2% versus prior quarter and 19.1% on a year-on-year basis. So that is surely a good sign in China. Also, good sales are continuing, retail sales are continuing in China as well. Now, overall, other than that, they continue to forecast that, the sequential volume recovery in JLR is likely to continue. So they expect this recovery which we're seeing on a quarter-on-quarter basis and for China on year-on-year basis also to continue going forward as well. They also see strong FCF, that's free cash flow generation and deleveraging for Tata Motors as well. So these are the main positive points, and that is why they are quite positive on the stock as well, and they are maintaining a buy stance looking at the retail number sales numbers which came in yesterday as well.
Okay, thanks for that, Vinny. Another stock in focus is GAIL, and it's currently rallying in trade as the company has announced that it will consider a buyback of shares and dividend payment on the 15th of January. That's in 3 days. Earlier today, we caught up with the chairman and managing director of the company, Manoj Jain. Let's listen into a slice of that conversation.
As you rightly pointed out, the new pipelines are the backbone for GAIL's business, and some of the pipelines which were long pending are also now coming to the end, and now we are getting the fruits of those long efforts. So definitely one of the pipeline which this month Honorable Prime Minister has inaugurated, also we have started consumers taking gas across that pipeline in Kochi, Mangalore, and presently we are expecting a revenue increase of over 100 crores per year with the current consumers, and maybe in a year's time we expect it to go up to around 180 to 200 crores, and then slowly it will build up as the city gas distribution network across those districts also come up. Similarly, we are also working on this Eastern India pipeline, and some of the sections will be soon commissioned, and remaining will be also commissioned during this year. And here again we expect that out of the 3 big fertilizer plants, 2 fertilizer plants will definitely come this year, and third will also have their pre-commissioning activities. So that all is going to be a significant number in terms of volumes. You can think that the new pipelines, maybe by the year end of 2021, we may have another 5 to 6 MMSCMD of volume flows increasing because of this Eastern India pipeline, and around 1 to 1.5 million standard cubic meters per day increasing due to this Kochi pipeline. Similarly, we are also working for Mumbai-Nagpur-Jharsuguda pipeline.
Okay, Jio is also in focus today because it seems, according to CLSA, that an IPO might be on the cards, and they've already assigned a price per share of 770 rupees, excuse me. Let's go across to my colleague Ajay for more.
Well, that's correct. CLSA believes that 2021 could be the year when Jio actually goes for an IPO. In fact, they're saying that the fundamentals of the space are factoring in that the fundamentals are shaping very well, actually. There have been tariff hikes in 2019, 2020, and there is one expected in 21 as well. Between 22 and 23, they expect very sharp increase in margins for Jio platforms, EBITDA for Jio platform. They also go on to say that the leadership position for Jio may continue in the near term. They have over 45% of market share. And in fact, the IPO of Jio actually could be a catalyst for valuations of the entire sector. So it's a very big positive. Remember, CLSA currently values Jio at around 770, 780 rupees a share. So almost over a third of Reliance valuations is now Jio platform. They've done almost $20 billion worth of deal to institutional as well as strategic investors. And they would be looking for some part exit or at least value unlocking for the big investors, which has happened. So Jio IPO could be the way to go. And according to CLSA, this may very well happen in 2021. It will be a big trigger for the stock of Reliance Industries overall as well, which is right now quite subdued after the big deal which have happened. So it will be interesting to see whether the stock gets excited. How does the performance of 2021 be for shareholders of Reliance Industries?
See if Jio and Reliance can now play catch up to the markets which they've underperformed for the last couple months. Time for a quick break here on Buy Now Sell Now. We'll be back in just a minute. Stay tuned. Hi, welcome back to Buy Now, Sell Now. It's 11:54. Let's bring up the BNSN Quiz Connect solution for today. Our question to you is, which of the following real estate players has the majority of revenue and projects based in Bangalore? Your options were DLF, Prestige, Sobha and Godrej Properties. The answer is Sobha. We have three champions who got it right: Jay Patel, Natesh Gaud and Bharat Sani. Your names should be flashing on the screen in just a minute. Congratulations. Please keep tweeting to us, participating in the daily trivia of our quiz. We're done here on BNSN, but as we wind down the show with less than 3 weeks to go for FM Nirmala Sitharaman's to present one of the most challenging budgets of modern India, the first indications of a never-like-before budget is already here. For the first time since November 26, 1947, the budget copies will not be printed. The traditional halwa ceremony that marks the official printing of the budget is also set to be dropped. Let's take a look at this special report, and goodbye from me.
The countdown for the budget has begun. Finance Minister Nirmala Sitharaman and her A-team are gearing up to present one of the most challenging budget of modern India. With COVID-19 sending the Indian economy into a coma, one thing is for certain: it will be a budget like never before. The first indications, in fact, are already here. The latest casualty of COVID-19 is set to be the budget copies. For the first time since November 26, 1947, the budget copies will not be printed. North Block houses a dedicated press for printing the budget documents. Next to the press is the boarding and lodging area for officials involved in budget making. As many as 100 budget officials are housed in the press till the budget documents are sealed and delivered. But due to COVID-19, the government has decided to give this custom a miss. Not only that, the traditional halwa ceremony that marks the official printing of the budget documents is also set to be dropped. All 750 members of the parliament will get soft copies of the budget and economic survey. And there will be no familiar sights of trucks loaded with budget papers in the parliament on budget day. The year 2020-21 has been a breakout year in many ways. Along with the many things that COVID-19 has brought forward, a paperless parliament is also one. The parliament has been trying to digitize its records for many years. Looks like this time we could be a step closer to it. Ruchi Bhatia, ET Now, New Delhi.